Hello guys, welcome to M-Trading's webinar, and let's begin. So what we're going to cover today is market analysis using primary along with secondary indicators, with more focus on those secondary indicators. One of my favorite indicators is the RSI, so the Relative Strength Index. This shows me the momentum in the market, so the strength that we're seeing behind the price movements that we can see on the chart itself. I have covered this indicator quite in depth in a previous webinar, so have a look at M-Trading's website and our YouTube tutorials for that webinar. In addition to that, I will be going into moving averages. So two simple moving averages, a 200 moving average, which is that black line over there, and then we have a 50-day moving average, which is this red line, as you can see on my chart. Okay, so we're going to go into a few assets. We're going to talk more about the technical, so the technical aspect to it, rather than going into the fundamentals. I will be covering more fundamentals as we progress through our webinars. But I want to focus on the technicals and adding the secondary indicators. So the chart I have in front of me is gold. So the chart that you can see on the right now is gold. So the symbol for gold is EURUSD. What I like to do is just look at the bigger picture. So I'm on a daily time frame. I'm going to zoom out a little and see where price action is currently. So I'm looking for highs and lows. So the first thing I want to do is place my support and resistance levels. The first thing I generally do is place a support level below the previous low and a resistance level above the previous high in this range here. So that is my support and that is my resistance level above. Okay. Then I'll also take a look at how many touches have we got to those specific levels, those support and resistance levels previously. So I'm looking for price action to show me that it's been respected previously. I want to know that are there other buyers or other sellers in the market previously that have bought and sold at these current levels that I'm looking at. My support levels at 1204.14 and my resistance at 1356.56. So we can see just from this previous resistance, or this prior resistance, the prior higher also is in line with a previous high also. Yes, we did break through. It was a false breakthrough, straight away rejected, tested again, and then back within the range. So we can see this area here. Let me just highlight that area. It's quite important. So this area here is quite important, guys. We can see that buyers in this zone tried to break through, but sellers came back in, pushed the market down once, twice, 3, 4 times. So a lot of sellers at this key point here. So naturally, if price action gets back to this range, we are going to see more selling pressure, as we can see. Yep. In addition to that, my support level. So looking at support levels, I'm looking for, that's my previous low. That is my previous low. Okay, so we've got a test over here, again, in this zone here, and as also a resistance level previously. So yes, we do have multiple touches in this area here. So that is a key support level. Just by doing this analysis, guys, I'm able to better understand, okay, what are my ranges? Where has the market been? What's been taking place? Okay, in addition to that, let's see if we can place any trend lines. To place a trend line, we're looking for higher highs and higher lows. Remember that. If that's for an uptrend. For a downtrend, we're looking for lower lows and lower highs. If you don't know what that is, look at my previous webinars, which I've covered more about price action. Okay, so I can see a trend line placement from this low. So I'll take the low, something similar to this. That is my primary trend line there. Yep, so that is my primary trend line. Let's just adjust this slightly. So that's my primary trend line there. Let's extend that a little bit further. Okay, so that's my primary trend line. Okay, so I can see overall of this whole price structure, the price wave movements that take place on this chart. If I just highlight those areas, this being that low, so this is that low area, that is the high. Again, a significant sell-off, and then this is our new high. So in a way, we're almost consolidating if we look at the top end. It's a little bit early to actually form a symmetrical triangle pattern on the top side such as that. It's a bit too early for that, but yes, we can see some consolidation taking place in this area. So what is my secondary indicators telling me? Okay, so just looking at the bigger picture on my secondary over here, the key point I'll say is where you can see almost in this area here, we get up to the overbought zone very quickly. So you can see almost testing this overbought zone multiple times, which doesn't naturally mean, okay, let's reverse at this area. No, it generally means that, okay, there's a lot more buyers in this market. There is a lot more buyers in this market. How often does it get to the lows? Not often. Look, only in these two areas, these two areas that we see that we get to the lows. Other than that, it's been higher lows, especially most recently. Yep. So generally, we're seeing on price action that we're not seeing such a move to the downside. We're seeing more buying pressure taking place. So as long as we're staying above a certain level, so we could almost say this level here, we're staying generally midway. So midway point of this RSI, which is the 50 level, yeah, the midway range is that 50 level. There is a lot more buying pressure, and the RSI line stays above the 50 level generally more than it does stay below the 50 level. So naturally that would mean we're seeing more buying pressure, which confirms what we're seeing on price action also. Another key indication is looking at the moving averages. What I'm looking for in the moving averages is the crossover as well as price action above that level. So we can see, okay, in this area we crossed over, so that is a bullish crossover, but we do have a bearish crossover in this zone here. And then we're also seeing a bullish crossover in this area. So currently we're seeing more bullish momentum. In addition to that, the range between the spread between the two moving averages is widening. That also gives me more bullish sentiment there. But it's gone on to hit this resistance level where we're seeing a strong rejection. So I'll be looking for a continuation in that uptrend, but now I'm looking for where is the best place, where is that area where I'm going to see a turnaround from selling pressure to buying pressure. I'm looking to buy this asset. Yep. So ideally, you're looking for a buying position above the moving average. So if we look at this area here, so above when it comes back to retest the 50 moving average, or potentially the 200 period moving average. Or we could wait for price action to get to these lows, back to this zone here, and then we could see a turnaround at this point here. And then you can place a counter trend line in this zone, and that's what you're looking for as your breakout to the top side. So, yep, and that would also give us 3 touches to our trend line, which confirms that trend line. Yep. But so far, there isn't a significant, a good enough risk reward to take this trade. Purely if you're looking to go short now, you've missed the trade. Ideally you want to get in short at these highs close to that resistance level. Yep. But remember that the trend is bullish. Getting closer to price action, let's have a look at what are we seeing here. So yes, we can see there was a move to the top side. We had a gap lower, and let's add a little bit of fundamentals to this. The original movement was based on a risk-off scenario, so a move to from a riskier products to more safe havens. That's what we saw. But now we're seeing more bullish sentiment with a risk-on. We can see that the US stock market has made new highs, so all-time highs. Naturally, that would have an adverse effect to gold. In addition to that, we've seen some recovery in the dollar index. The US dollar index has also started to recover from those lows. So that also has inadvertently had a reaction within this asset. But so far, yes, looked for a bullish move, but you need to wait for that exact setup. But have a look at your secondary indicators to help you confirm which direction you should be trading. Ideally, if you have a positive crossover, so the faster reactive moving average is above the slower reactive moving average, then yes, you should be looking to buy only. If the slower moving average is above your faster reactive moving average, then yes, then you're looking for a potential short position. Okay, let's move on from gold. Let's have a look at another asset. So let's go into Euro Sterling. So a key point here, guys, a great setup over here, guys, which is, let's zoom out a little bit. So if I now just remove that, and let's zoom out slightly. Okay, just looking at the moving average crossovers. So what we can see, based on this particular asset over here, so if I just get my tool over here, my pen, so yes, we're seeing that, okay, this is the faster reactive moving average crossing above the slower moving average. That is our potential buy signal, and it stays in above the 200 all the way up to the top end over here. All the way up to the top ends over here. So that's extremely bullish there, guys. All the way through, getting in a trade. So suppose you get in on the break of this previous side, so this range here. Get in this zone over here. That is your long position. A stop loss below your moving averages. You can place a stop loss there. Or a little bit aggressive, you want to be just below the 200, along with below previous lows, which is that level there. You could have trailed this all the way through. So your initial stop loss in this zone will be then moved as you're in this, once you're at this point here. So once price action has reached this level, we can then bring our stop loss at this zone here. By that time, you've almost reduced your risk by half there. Yep. Price action continues in your favor. You make a new high in this zone over here. Then yes, you can move your stop loss up to this range here, and that has continued all the way through, and by this time you'll be in some significant profit until price action breaks through. So your stop loss may have been at this point in this zone here, or you could have decided as soon as price action breaks through the 50 and the 200, that is your way of closing the position. So yes, a very strong bullish run here. How many times did it test? How many times did it go on to test that moving average? Multiple times. So you can see this area here, this whole zone over here. Again, it's another one there, another one there. There we go. So multiple touches back to your 200 moving average to confirm that bullish sentiment. So it's seen as a very strong support level. Okay, so let's have a look at what's taken place recently. So let's move across. Okay, so we did have the crossover, which led to a downtrend. So that is our downtrend, as you can see. Let's zoom in a little. Okay, so we've had the crossover, and now that's a signal for a short position. Again, have a look at the moving averages, how they confirm as a resistance now. So originally confirming as a support level, now we're seeing in this zone here as resistance, again resistance, again as resistance. In this area, we're just seeing an increase in momentum and also being respected on the 50 moving average. So again, 50 period moving average being respected at that area. But then we've had the initial extreme sell-off, a double bottom potentially, and then the break to the top side. Now we're seeing a break to the top side. So we're in the zone between our two moving averages at this point here. So in that zone, we're between the two moving averages. Ideally, I'm looking for price action to either. So if I now remove this and bring in a bit more space in the front there. Yeah, so I'm looking for price action I'm not looking to trade within this spread here. I'm not looking to trade within the spread. Confirmation for me to go long is once we break above the 200. Or we could wait for price action to get back to, if this continued in this way, this point, and then break lower. And that's my continuation in Euro Sterling. Yeah. Another fundamental to add to this, a key component that will definitely have an impact on this asset is what's going to take place on Sunday, which is German elections. So we have German elections taking place on the 24th, and in addition to that, we do have Brexit negotiations and FOMC taking place in the coming days. So FOMC will have less of a effect on this because this is not the dollar, but if the US increases its interest rates, that does have a very small correlation to this asset. But particular, I'll be watching out for Brexit negotiations, which are taking place shortly, along with German elections that's taking place this Sunday, which will definitely have an impact on the euro. And that will give you a better idea of, okay, what could potentially take place. So yes, that's the key area there, guys. My secondary indicator, so the RSI, overall, let's just zoom out slightly. So if I now, actually I could just focus on this area here. So during this crossover, so we had this crossover that took place there, more selling pressure, and that downtrend continues with lower lows and lower highs all the way through, all the way down to this point there, a tracement down to this low. That's a low. We've gone on to retest this zone here, so we've gone on to retest that zone there. Yes, we've gone to retest it. If we break through that level, very short-term bullish move could take place, but again, that depends on your trading scale. When the 1 hour time frame, would I take a trade from here to just to this point? No, I'm looking for that bigger move. If I'm on a 5-minute time frame, then yes, I could look for this as my resistance level and a bullish move to take place then. But if you compare this price action to my secondary indicator, which is the RSI, during this downtrend, when it starts at this point there, so we start somewhere in this range here, it stays below that 50 level, so around that 50 level. We have one burst of movement to the top side, hits the overbought zone. Straight away we have selling pressure, and it stays in this zone here. Again, it tries to go on to retest that overbought zone. Does it get back to it? No, it doesn't. So it rejects earlier. So there is more selling pressure coming in early at this point. Again, this is going to test multiple times the oversold zone, and then even breaks through it quite significantly at this point here. Again, back up at the range, what we're seeing here, rejection again, a rejection with the buying pressure. More sellers come back in, and then we equal the previous low here. So overall, this is very bearish for me. This is seen as very bearish for me. We're almost seeing, if I just draw that correctly, it almost has a downtrend at this point. So if we get from this side and to this side, something similar to this. So we're seeing this downward movement taking place, more selling pressure taking place at this key point there. Yep. So the next point I'll say to this, to add to this, which is what's taken place recently. We've had the break above. So we have broke through, and we have got to the overbought zone and broke through this level. So this could be the first sign of potential reversal. It's now come back to that 50 zone, close to the 50 level. Yep, so assuming that this is your 50 level here. It's come close back to that 50 level, and it's bounced off it. So if we start to see more buying pressure, something similar to this, then I could potentially look for, more buying pressure to take place. So we'll have a move and a breakout to the top side. And that could be my potential reversal at this point here. Yep. So this is what I'm looking for my analysis, guys, which is moving averages with the RSI to give me an idea of what the strength is. I'm seeing whether we're above the 50 level, below the 50 level, how much buying pressure is there, how much selling pressure there is there, and looking back also, how important is it to look at, okay, what's happened overhead compared to this, and then compared to this one. And then you compare in the top side also. Another addition to this is look for divergence. When we start to see divergence in price action, that's very important. That is extremely important, guys. Yep. Okay, so let's have a look at another asset. That will give us a better understanding, and we're going to finish off with a US stock market. So the US stock market, that's gone on to make new highs, guys. We're making fresh new highs. So let me adjust the screen slightly. So we'll look at the Dow Jones. Dow Jones is a great chart over here. Let me add those indicators. So let's add some of the secondary indicators. There we go. Okay, so let's zoom out a little just so that you can see the bigger picture. Okay, we can see the bigger picture. That overall it's been in a significant uptrend. Yep, so a significant uptrend over here. Making high highs and high lows all the way through. A few times we had some sideways action, some strong selling pressure, more of a retracement than a correction. But most of the time during this period, we've seen that the 50 period moving average has been above the 200 period moving average. Let's zoom back in to the most recent price action. The key point here is have a look at what's taking place over here. So the first indication is this point here. So if I just highlight this here, this here. So the crossover of the 50 above the 200. Yep, so that's where you also see on the top end over here a significant push to the top side. You haven't seen it do that previously. So we can see a lot of momentum taking place for that crossover to continue in that direction. That continues, comes off little, breaks through, but the 50 stays above, and then continues. Then we have that continuation in that uptrend. Most recently, we're seeing more of a correction here. Not only just a correction, if I highlight a particular point, which is, let's zoom in a little. Okay, so what I'm trying to highlight over here is looking at the highs and lows, guys. Let's look at the highs and lows of this price action. So we've had a bullish run, so a very strong bull run, and then we go on from this high, gone pushed lower, retracement, and then a lower low there. So lower low. This goes up to and then retrace back to this low. So we've seen these highs and lows that are equal to these previous ones. Yep. So this is almost as price action is not just ranging, but it's converging. Price action is converging between two levels, and those levels are in line with each other. Something similar to this. So that is your convergence taking place, almost as a symmetrical triangle pattern taking place there. And then you have the breakout. The breakout takes place to the top side. Yep. To highlight something on our secondary tool here, which is the RSI, Relative Strength Index. The key point I would say is, okay, so a bullish run at this point here. So a bullish run up to this high, which is in line with price action highs. Yep. And we have a strong sell-off. You can see previously gets to this level, but not any lower than that. Yep. So we can see all these lows are still higher compared to this low. When we had this sell-off, that made a new low than this previous lows. Yep. And then the high doesn't get back to the overbought zone, but the low breaks that previous low. Again, equal high, equal low. And then a small burst of a breakout where you can see this has broken that previous high. That gets rejected, back lower. So that breaks through that previous low. And at this point here, we gap higher, and then that's where the next impulsive run begins. And in this area here, we've stayed in this overbought zone. So buying pressure has only continued in that direction. Yep, so looking at a break above, so you could have waited for your 15 period moving average to cross above again. So once we've got something like this, entry on this point here. In addition to that, that also breaks this previous high. So look at this previous high, there we go. So price action goes on. If I just do that again, and let me now just zoom in a little. Okay, so the way to view it is, okay, if you're looking for particular breakouts, let's put in a horizontal line at this point here. So that's our high. And what we're looking for is looking at reading price action a little bit more. So that's the highest point that we've been at. Price action consolidated within this price action range. Yep. So there's two options here. So you could have placed a trend line above these highs, so you can include that spike high, something similar to this. So you're looking for a breakout above this range, and you're going to exclude, let's just put that in. So you're going to exclude this as a false breakout and then a strong sell-off back within the range. So a false breakout within this point here. So yes, your first option was wait for the breakout of this. So you could have actually got in at this point. If you did get in at this point, that's not a bad idea. That's not a bad thing. Well, you didn't know at the time it was a false breakout, but your stop would be placed over here. If you had a correct stop loss, you would still be in this trade right now and in the money. Yep. But let's go with this as the breakout. So this breaks out of that range. We enter at this point over here. Stop loss below this low. We're looking to go long. Yep. That is another option there. In addition to that, your an additional confirmation would have been when you have the moving average crossover at this point, and you're waiting for the break of that all-time high so far, which we can see in this candle here. So this candle is an impulsive candle, so you enter on this candle here. The candle after, I'll wait for a close of the candle, so that's your entry point. Your stop loss is placed, ideally, either an aggressive stop loss is placed over here, or if you are more conservative, going for that longer run, you need to place a stop loss below these two moving average crossovers in this range here. And that is your longer term objective. So it depends whether you're short term or medium to long term, or you're aggressive or conservative. Yep. That's your breakout. Very key important indicator is where you have the retracement back to test this level and then break again above it. That's also extremely important. So that shows a continuation of that bullish run. And yes, this has just remained in the overbought zone. Yep, so we can see how this has remained in the overbought zone. Yes, remember guys, not to just take your secondary indicator. When it's in the overbought zone, you look to sell, and when it's in the oversold zone, you look to buy. If that works really well if you are in a ranging market. If the market's ranging, then that works brilliantly. But if you're in a market which is trending in one direction, then your signals need to change. If the trend is bullish, then every time it comes in the overbought zone, and so let's do that again. So every time it comes back in the oversold zone, you look to buy. Again, you look to buy. Again, when it comes to this area, you're looking to buy. So you're looking to add in or put in new positions in an asset that's in the direction of that trend. But if the trend is down, so the overall trend is down, your selling signal on the RSI will be every time you're in the overbought zone. Examples that, this, or even this. Ideally, you do want to wait for the turnaround. So right now, you can see that's all the way through this. It's bullish still. It's overall bullish in that direction. Wait for the break lower when it breaks through this level. When it breaks through that level, that could be a sign of either consolidation, retracement, or a reversal. Yep. Remember that markets are more likely, so 70% of the time, markets are going to trend and then consolidate before deciding which direction it's going to go, whether it's up or down. That's 70% of the time. Yep. 50% of the time, the median probability setup is that the market is going to trend and then retrace, so pull back and then continue in that same direction of the trend. So that could be 50% of the time. And in addition to that, the third final one, which is markets trend, and then you have a full reversal back to those previous lows. That is quite not rare, but not common either. So that I would say is 30% of the time for this to take place. So ideally, remember, consolidation is what you want to aim for. Yep, so if you're taking a short up here, you want to target back to this area here. Your second target is back to that retracement low, and then your third target is back to those reversal lows. But if you're just going for this as your target, then in a way you're expecting this single trade to go to the moon, which is unlikely. Yep. Remember, trading is about probabilities, guys. Okay, so I'll end it there, guys. We've discussed specific markets. We've gone with a commodity, with an FX pair, as well as an indice. If you have any recommendations, please let us know. Have a good afternoon, guys, and take care. Bye-bye.